You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 28th day of August, 2020. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You'll get a reminder emailed right before the show starts, and when you join, you'll have access to the discussion box or the chat box so that you can participate in the discussion and ask questions at any time during the broadcast. On the days you're out of the office, away from your desktop, not to worry, just point any internet connected browser to cfrn.net/live. And there you'll find a live real-time simulcast of the show as it unfolds, You just won't have access to the chat box. We also stream live during the broadcast on Facebook, YouTube, and Twitter. And the rest of the time, CFRN Radio is streaming the gospel to the four corners of the universe, as we've done since April of 2005. Let's open with a word of prayer. Heavenly Father, this is the day that you have made. Let us rejoice and be glad in it. Father, we thank you for another opportunity to serve you and to live life in fullness. Thank you for the strength that you've given us to face another day. Thank you for the bright hope that we have for the day ahead. Truly, God, life is more worth living with you to guide us always. And Lord, we pray a special prayer today over our children, all of our children, whether they're still young, maybe they're grown, maybe they have children of their own at this point. We thank you for them, Lord. We pray, God, that you would give them wisdom, guide them, teach them, show them your way, not the way of the world. May they always exhibit the fruits of the Spirit: love, joy, peace, patience, kindness, goodness, faithfulness, gentleness, and self-control. And as they go about their day, Lord, we just pray that your hand be upon them, that you serve as a hedge of protection around them. All these things we pray today. In Jesus' name, amen. Okay, let me give you the numbers from around the world. These are the cash markets, the indices as they're called. I think Garrett might be joining us today. He just rang my phone, but I wasn't able to answer it because I was talking to you. So I'll call him back while Michael is doing the recap. Currently, the Dow is up 111 points. NASDAQ is up 75. S&P 500 is up 12. The Russell 2000 is up 6. No movers, no shakers there. In the commodity basket, let me double check this data. Just want to make sure. Yeah, just want to make sure it was correct. All right, crude oil down 6 cents, trading $42.98 last. Gold up $46, trading at $19.7860 last. Now that's a gain of about a little over 2.25%. Silver up 67 cents, trading $27.87 last. And a reminder that a $1 move in the price of silver, that translates to $5,000 per futures contract traded. Now, in the Asian markets at the close, Nikkei down 326 points. That's a drop of 1.5%. Shanghai posted a gain of 53 points, which is a gain of 1.5%. The Hang Seng added 140 points, which is about half of 1% for the Hang Seng. And in European markets at the close, ending out the week, FTSE down today 36 points, DAX down 63, and the CAC down 13. That gives us a mixed day in Asia, a red day in the UK, and so far it is a big green Radio Friday here in the US of A, and we are above the highest weekly trading zone on some of the markets, so we'll take a look at that when we go to the charts. And we'll go to Michael right now, if you're ready, Michael. And
I am ready.
He will give us a recap of everything that happened this morning in the live training room. After that, I'll come back and we'll go over the charts. We'll go over the big picture. We'll take a look at the Concierge Trade Alerts. We'll take a look at the Logic 247 alerts. all that and answers to your questions. I'll see you in a few minutes. Michael, it's all yours.
All right. You should be seeing my screen.
We got
right
it
now.
locked and loaded.
Excellent. Okay. Let's jump right into this. Here. We'll just start out with the spreadsheet. Now, if you're not a CFRN partner and you want to become a CFRN partner, go to eminifuturestrading.com and just follow the instructions there. Okay, eminifuturestrading.com and just follow the instructions. Okay. Now, this is a spreadsheet for today. It's actually the spreadsheet for the last 7.5 years, but today's input. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 28th day of August. We lost 8 ticks in the euro and we made 36 ticks in gold. That put us at plus 310 on the morning session. Today it took 21 minutes and 3 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of, I think, 10 trades. Let me scroll over. Yep, 10 trades. On the month now, we're at $9,373 per contract. That is one contract, 2 hours per day, and I miss most of the trades. That's over 20 days, averaging $468 per contract per day. And it is now my 135th day. See, this says, since my last day, I did not hit gold. I've really only had one down day this year. Knock on wood. On the year now, we're at $62,684. That's over 160 trading days, averaging $391 per contract per trading day. Okay. So again, if you want to become part of the CFRN family, go to eminifuturestrading.com. Okay. Let me see in here. Venus is not in here. Okay, I just was looking at something. Gold was wild again today, guys. So I'm going to make gold last. The ES, I didn't do anything with it. Well, I had one trade on the ES, and it was a break even. Right here. I had a break-even trade. Now, I could have taken some profit. I was looking for the goal for the day, and it got up there, but it didn't fill me. And then it came back and took me out at break-even. And that was going to be my first trade of the day. Well, it was, actually. I think. No, I took a trade on gold before that. I got a couple of ticks on gold before that. But then I was looking for the goal for the day on that one. And it got up there, and it almost got me. Gave it to me, but it didn't. Now, looking at the YBR trades, there were a bunch of them. You see red, bearish separation, move down, and it ended up going down like this. It took a little while, and it chopped around a bit. Blue, bullish separation. Again, it took a little while, and then it moved up. Red, bearish separation, and then it went down. Blue, bullish, up. You only need one of these a day. Okay, now I just showed you about 6 in the first, well, within the first hour. And, like right here, this is bullish, blue with an up close, bang. That's all you need. One a day. We'll go to crude. Now, I didn't do anything with crude today. Okay. Crude was kind of, we had this one leg down right here. This one big leg down right here. And then it came back, but it didn't give us a trade setup. And then there was nothing else. So crude was kind of rough today. It did have a YBR trade right here, right at the beginning of the morning. And that would have been a break even. Then if you did the next one, You could have taken some profit. I mean, on both of them, you could have taken some profit. But for me, it would have been a break even. And then we finally had the good one right there. I mean, the really good one. They were all good, but we had a really good one. But over here on the YBR, we had bullish and a nice move up. Bullish and a nice move up. And this one I wouldn't do. And that was crude today. Now, on the euro, we had one trade that we stopped out on right here. We got long and it pulled back and stopped me out, and then it went and did what it should have done. But doing the YBR on the euro today, let's see, where was the first one? Right here. Bearish separation right on the YBR and a down close. Now this was really choppy in here and nasty, so you would have taken profit on this first leg and not done anything in the rest of it. Okay, now right here, you could have taken profit there. It was bullish with blue and an up close. Over here, bullish with blue and an up close. And then we stopped out on this one and came back, hit the blue. And it eventually did what we wanted it to do, but there was no other trade. This was a trend line trade right here. I didn't draw the trend line. I just told everybody what I was doing. That was the trend line. Okay, so it was a close above the trend line, pulled back, stopped me out, and then went up like it should have done. Not really much during the break. Here we had, once we put in a higher swing right here, we pulled back, and did we put in a higher swing? No, we didn't. Here we pulled back and hit the BBC, so this would have been a long trade right there, and another one right there. Not really a lot during the break. Okay, there was very limited opportunity. And that was the euro. Now we get to gold. And, I'm just going to go over the trades that I did or that I highlighted on the gold because there were so many. All right. So the day started out right here at 9:30. And it started whipping around. It bounced up, it bounced back down, it bounced back up. And right in here was really the first trade opportunity. Okay. And then it got really choppy. It didn't give us anything. And then we had a long opportunity right here. There was a short opportunity right there, a short opportunity right there, and we had the long opportunity right there. And looking at the YBR, we had, well, we didn't really have much with the YBR because it was whipping around so much. It was pulling things in the same direction too fast. And so we had a short opportunity there, and this is where we got our goal for the day, right here. We picked up on the first trade on gold. I don't think I even wrote it down, but we picked up 2 ticks on the first trade. And then on this trade, we picked up 10 to put us at plus 12 on gold. Then 1 right there to put us at plus 13. Then YBR long right there that I don't take credit for. And another long. We went from 13 to 15. So there was a trade in here that was 2 ticks because this one was 7 ticks. And, there were YBR trades in here as well. There was a YBR long right there. A YBR long right there. A YBR long right there. And moving on. I mean, at this point, we were up plus 20, plus 21. Okay. And there was a long trade here that I missed. And as far as the YBRs go, there was a short right here that would have given you something. And right here was a long that I took, and I got 4 ticks. It put us at plus 25. I took this, got 10 ticks, put us at plus 35. And now we're getting toward the end of the day, or the end of the morning session, I mean. We took one more trade over here for 1 tick to put us at plus 36. Now there was a YBR long right here, a YBR long right there. And then we get into the break. And, I'm not going to go over all this stuff during the break because, well, it's Friday and I have a bunch of meetings to go to. All right, go do. So with that, I am going to say, if you are not a CFRN partner and you're not trading commodities, I don't know why. But to be part of the community, be part of the family, go to EminiFuturesTrading.com. EminiFuturesTrading.com. Okay. Now, I can go jump back to the spreadsheet really quick. I don't want to take up a lot of time right here. Today is the 20th day of August, 2020. We lost 8 ticks in the euro, made 36 ticks in gold, put us at plus 310 per contract on the morning session. Okay. Today it took 21 minutes and 3 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 10 trades. On the month now, we're at $9,373. That's over 20 trading days, averaging $468. Now, that is 1 contract, 2 hours a day. Okay. So I've now gone, I'm knocking on wood again, 135 consecutive days of getting my goal. On the year, we're at $62,684. That's over 160 trading days, averaging $391 per contract per trading day. Okay. Again, go to EminiFuturesTrading.com. Okay, to become an active partner. All right. And with that, I will pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. Okay, there we go. All right. Recap of the recap.
Today it took 21 minutes and 3 trades to get to $120 per contract.
Okay, good job.
Thank you. And Venus in here yet?
I did speak to Garrett, guys, and he's going to try to join us about 1:15 Eastern. So that gives us time to work our way through the recap of the Logic 247 alerts and the Concierge Trade Alerts. I think John will be popping in and joining us today as well. Now here's where we stand for the week with Logic 247. Now we have 2 different alert services. Okay, one, Logic 247, those alerts are delivered to you via the private Telegram channel live in real time as opportunity presents itself. And you always have time to get to your computer, get settled in, get your thinking cap on, get your trading cap on, and be focused when the trade triggers. Now, so far this week, we've issued a total of 51 alerts. We've been up here at the top. Markets behave a bit odd when we're at the top. Now, just to show you the difference, if I scroll back up to last week, week 107, for the entire week we had 100 alerts. So almost twice as many alerts last week. There were 69 actionable, 15 were stopped out. So 22% of actionable alerts were stopped out. That's based on not risking more than $300 per contract per trade. Now, what we've averaged over the last now 108 weeks is 20%. The week prior to this was 12%. So with week 107 behind us, we headed into week 108, which starts Sunday night at 6 p.m. Eastern. That's when the Globex markets open. Most of the world's waiting on Monday morning, 9:30 a.m. Eastern, for Wall Street to open. But we get busy on Sunday night, and I'll show you how busy we get here in just a moment. So this is what it looked like on Monday. Tuesday, when we started the afternoon broadcast. Wednesday. Thursday. And here we are today. 51 total alerts. Half as many as last week, and that has to do with the market. Okay? Again, these alerts are based on whenever opportunity presents itself. The concierge alerts, which I'll give you a screenshot of here in just a second, the ones that were issued last night, that's a static report that comes out at the beginning of the Globex session. And it helps you see the sentiment for the session. There's two prices for each market. The idea is that you go to your chart and you put a line in the sand, as we'll do here in just a moment. Put a line in the sand on the long side and the short side. Doesn't mean you can't trade between those lines. In fact, there's often some very good opportunities between the lines. But once you reach the long side of the concierge, then at that number and above, you're only looking for long trades. And once you hit the short number, then you're only looking for short trades. You can get short at the number, right at the CTA, or you can let it punch through and then catch it on a pullback. Okay, these are things that we teach you in the one-on-one mentoring sessions. So out of the 51 total alerts this week, 43 actionable, 3 got stopped out. So that's 7% of actionable alerts stopped out this week. Now that's obviously better than normal, because the average over the last now 108 weeks, 20%. Okay? Now, this is what the concierge trade alerts look like. And let me scroll up to Sunday night, just to give you an idea. Now, I did something a little different in the alert channel this week. As Valerie completed the recap each day, I came and did a little calculating. So again, I just showed you this last week, week 107, and Sunday night began week 108. Now, we normally get started at 6 p.m. Eastern. I was running a little late this past Sunday, so it was 7:05 p.m. Eastern when we got out the first alert. I'm on Pacific time, and when you install Telegram, that's one of the first things. Well, when you become a member, a CFRN partner, a passport holder, one of the first things you need to do is get Telegram installed on your phone, on your PC, on your tablet, because that's where we're going to communicate back and forth around the clock. That's where you're going to get the logic alerts delivered to you live in real time. So the first alert that came out Sunday night was to be long the S&P at 3403. Initial target was 05. Second target 06. Third target was 3418. And then the weekly trading zone overhead, because on Sunday night we're using the previous week's alerts. The weekly trading zones come out Monday morning at 6:15 a.m. Eastern. Now, we've been publishing those since December 14th, 2009. So the swing high of this move, obviously we've exceeded that for the week. In fact, we're above the highest weekly trading zone so far this week. But on this particular move, price ran up to 2150. But the way I did the calculations, the keep it simple, was I used the target that was actually reached. So we overshot the 1, 2, 3. We overshot the third target, but I just calculated from the entry to that target at 34.18. That's 15 points. At $50 a point, that's $750 per contract traded. Now that was the first alert coming out of the gate Sunday night. So if you've recently become a CFRN passport holder, would you put that in the context of all that you get? As it says right here, everything a trader needs, one low price. You already know 9 out of 10 new traders fail. Futures Magazine published an article years ago, 2006, I believe, is when the article was published. And it said 9 out of 10 new traders fail. Now, I had just moved from equities to futures, so obviously that was a little depressing to read. But the article didn't say why. It just stated a fact. So I went on the hunt. I wanted to know why. Because in any profession, they have a 9 out of 10 washout rate. I mean, Navy SEALs, which is probably the toughest job in the world, you don't even have a 90% washout rate there. Medical school, think of the toughest job you can think of. 9 out of 10 don't fail. But here is something that when you first look at it, gosh, it just looks so simple. Well, anybody can do that, right? Anybody can point the mouse and click and put on an order, right? So why? Why? Well, I was able to connect the dots pretty quickly. You had all of these people trying to do something without a teacher. And you say, oh, well, there's teachers everywhere. Haven't you been on the internet? There's thousands of chat rooms and gurus and videos and books, and boy, the list just goes on and on. But what you don't find is someone who actually takes you by the hand, sort of, and just guides you through the process of learning how markets work, how to read the chart, and how to understand what the next high probability move is. I don't care what any of these websites say about how they can predict the future. I'm here to tell you they cannot, not with certainty, because God did not give man the ability to know the future. In fact, he didn't give us two things. He didn't give us the ability to change the past or know the future. And those two things are inextricably linked. So, when we say everything a trader needs, I really believe with all my heart that is what we've brought together under one roof. Because if 9 out of 10 are failing, 1 out of 10 is succeeding for some reason. And if you go find that 1 out of 10 and just ask them this question: when you started, did you have a teacher? 9 times out of 10, they're going to say, of course. How else would I learn? Because that's how their mind operates. Unfortunately, most of our minds don't operate that way. Most of our minds operate this way. Oh man, that looks pretty simple. I'm going to make a killing. And so we just start throwing money at the market. And instead of making a killing, we tend to get killed, right? So we blow up one account. Oh, well, so we refund it. It's going to be different this time. And boom, out go the lights again. Then we start to question, wow, maybe this isn't so simple. So we start Googling till our fingers bleed. There has to be an answer. There has to be a solution. Well, the answer and the solution is understanding the principle upon which markets work, how price flows. Old-fashioned stuff like support and resistance. Now, those folks that have very sophisticated algorithms and other things to sell you, they'll tell you, wow, you can't trade that way nowadays because things are different. I beg to differ. Things are more the same today than they've ever been before. So, How did those algorithms work? How did all those sophisticated, convoluted, expensive indicators and oscillators serve you? Well, if it was anything like my experience, not so well. It wasn't until I really got a grasp on how markets work, what the underlying principles and fundamentals of the markets were, that I began to see a glimmer of hope. And so Michael and I, at one point, we had every indicator and oscillator in the world on our charts. When we ran out of stuff to buy, we started rolling our own. But we eventually realized we were going in the wrong direction. Even though it seemed like we were always one mouse click away from greatness, turns out we were always one mouse click away from greatness. So instead of adding yet another thing or creating another thing, we just started getting rid of things. Some people look at our charts and go, "Oh, you don't have anything there. It's just a couple lines. Where's your trend and your tricks and your advanced decline line? Where's your stochastics and your MACD? Where's your Bollinger Bands and your Keltner channels?" I'm not knocking any of those things. I am sure, giving the benefit of the doubt, I'm sure that they all do exactly what they were created to do. Unfortunately, when you get 2, 3, 4, 5 of these things up on your chart, and 3 tell you to go short and 3 tell you to go long, that just leads to confusion, analysis paralysis. You have no clear-cut idea of what the next high probability move is. Once you understand what the next high probability move is, then this is what can happen. This was the Sunday night initial trade, $750 per contract from the entry to the third target. And then there was a long on the Dow, 100 points, $5 a point, $500 per contract traded. Here's the Russell, $100 per contract. This is what the market made available. Now, don't get me wrong, we don't move the markets. Our indicators don't move the market. Our strategy doesn't move the market. The market does all that moving based upon the order flow. And order flow is simply the buyers and sellers that you see in the DOM, price channeling back and forth, back and forth. So the NQ ran up 65 points at $20 a point, $1,300 per contract traded. Here's Crude, $100 per contract. Gold, $200 per contract. Silver, 24 ticks at $50 a tick, $1,200 per contract traded. Here's a hedge on silver. See, this was a short. S is short or sell, B is buy or go long. 30 ticks, $50 a tick, $1,500 per contract. And the final trade Sunday night was gold to be short at 34. We dropped to 30.8. So from 34, I calculated it to 33, $100 per contract. But as you can see, price continued to drop. It dropped another $200 per contract, $220 per contract. But I just calculated it in the most conservative way. So here comes Monday. There's the S&P, good for 11 points. Here's the Dow, 20 points. Now on this one, I did add some notes on a couple. From the entry to the swing high, this was the swing high right here, 28,357. From the entry to the swing high, that's 157 points at $5 a point, $785 per contract traded. But I'm just calculating it at the 100 because, see, it went from 28,200 to 28,220. That's 20 points. Now, the next target was way up at 28,500, but we only made it to 28,357. So that's where the 157 points come in. Now, once you learn the strategy, the methodology, if you're trading off the 30-minute chart, after you learn the methodology on the range chart, we have what's called an exit signal, and I'll show you how to read the chart, how to know when the chart is actually telling you it's time to potentially take your profits because the move seems to be running out of steam. Here's the Russell, it was good for 2 points. NQ, good for 7 points. Here's crude oil. Now, the 10-tick target, initial target, okay, see it went to 57. The second target was at 60. So the swing high was 220 per contract, but just the initial target, that was 10 ticks or $100 per contract. If you just exit at the target, this is what you're looking for. If you held out for this, we came within 3 ticks of getting there. There's gold. Here's a no trigger. That's what the Z's mean. It was a sleeper, never triggered. Here's the Dow from the entry to be short at 280.75 down to 280.45. See, it actually went to 43. It went 2 points beyond that second target. PS means potential support. PR means potential resistance. So 30 points, $5 a point, $150 per contract traded. So what I'm trying to show you is that each one of these is from the entry, the published entry, to the published target. There's the Russell, 2 points. Here's gold, 10 ticks. You can also see what happened if you stayed in it to the swing low. NQ, 20 points, $20 a point, $400 per contract traded. S&P, long, 34.32. The exit signal printed at 34.42. The swing high was 34.46. 10 points, $50 a point, $500 per contract traded. Now that meant getting in here, right? And then getting it out from 32 to 42, 10 points. So there's the Dow. I entered a duplicate by accident, so that's why that one's scratched out. No trigger on silver. There's a stop out on the Russell. Here's a long on the Dow. Ran up 20 points, $5 a point. If you stayed with it, the swing high was 28.480. Stop out on the S&P. Here's the S&P long. 9 points, $50 a point. NQ, 9 points at $20 a point. No trigger. Stop out. Here's gold, $100 per contract. Silver, 13 ticks at $50 a tick. $650 per contract traded. Swing high, 34 ticks. It's $1,200. See, the swing high was 27.08. Now the weekly trading zone only took us up to 26.87. Okay. So from 24 to 87, that's where your 13 ticks came from. There's a long on gold, long on the NQ, long on silver, long on the S&P. No trigger. This was a hedge on the S&P, and the S&P hasn't done much dropping this week. But as we head into the close, watch it carefully because we are currently above the highest weekly trading zone. Here's a long on the Dow. No results yet. There's a long on silver. There's a long on the NQ. Long on the S&P. These are ones I haven't had a chance to do the math on yet, but you can. You right here, 34.92 to 34.94, that's the initial target. It went 2 ticks beyond the initial target. So that's $100 per contract traded. On the Dow, from 615 to 635, that's 20 points. The swing high was 28.718. So basically that's a 100-point move at $5 a point, It's $500 per contract traded. There's a long on the Russell, long on the NQ, long on crude, long on gold, long on silver. I'm sorry, short on silver. That was a short S. Short on gold, short on silver. And these are ones that just came out today. So I'll go in and I'll do the math on the rest of these. Now, question, is there a difference between Telegram and Instagram? Yes, Instagram is where you post pictures, and share your life story, kind of like Facebook. Telegram is a messaging client. It's fast, it's secure, it's free, and there's no advertising. So it really works well. We use it for the alerts. We use it for our discussion group. We use it for the weekly trading zones. We use it for the Concierge Trade Alerts. We even have a channel where we just shoot the breeze about stuff other than the markets. Todd says, is it too much work to put with your results on Logic 247, the entry time or the exit time? Yeah, there's a lot of work involved in the recap, but you should be able to go to the chart and you should be able to see it yourself. Okay. Natalka, yes, Telegram, you install it on your computer, on your cell phone, and on your tablet. This way, you're always in touch. This is how we're able to provide support to all of our traders around the clock. Because I've always got my phone with me, or my tablet, or I'm at my computer. Okay? And if you go to telegram.org, it's very simple to install. You just go here, telegram.org, and then scroll down. You click here if you're putting it on an Android phone. Click here if you're putting it on an iPhone or an iPad. This is for your PC, for your Mac, or your Linux. I don't know anyone that uses Linux, but some people do. And it's very, very simple to install. And if you need help getting it installed, if you run into a snag, you just let us know, and we'll be happy to help you out, walk you through it. As Michael said, if you're ready to become a passport holder, so that beginning Sunday night at 6 p.m. Eastern, you can have these available to you live in real time, this is where you go to get it started. EminiFuturesTrading.com. Okay? Now, once you go there and become a member, Valerie will send you out all the information that you need to get plugged into the different Telegram channels. I'll send you to a video that has a checklist of all the things that you need to be aware of, all the resources at your disposal, how to contact us at any time, all the answers to your questions. We have a series of frequently asked question videos that you'll watch. So as soon as you become a member, you'll get a email that's just filled with information. Hang on to that email because you're going to refer back to it a number of times till you get everything in place and you're ready to go. Okay? But again, if you want to be trading with us Sunday night, 6 p.m. Eastern, when Globex opens, just point your browser to EminiFuturesTrading.com. Now, let's look at the Concierge Trade Alerts. Remember, the logic alerts that we just went through, those are based on current price action. These are based on historic price action. When current and historic point at the same important price, important area, that is where you'll find your highest probability, lowest risk trade setups. And these are the ones where you go to your chart, put a line in the sand. We're going to do that right now. If you want to grab a screenshot, go ahead. 5, 4, 3, 2, 1. S&P, Dow, Russell, Crude, NQ, 10-year notes, gold, Canadian dollar, euro, British pound, silver. Okay, and I got them out last night at 6:45 p.m. Eastern. Now these numbers are good for the entire session. Most days these will trigger multiple times. When you have a strong day, a strong directional move, You might only see one trigger, but more often than not, you'll see multiple triggers, but it's important that you don't trade an alert just because it's an alert. Go look at the chart. Make sure that market structure still agrees with the alert price. Now, when you start with us, when you go to eminifuturestrading.com, get signed up, it's so important that you trade in the simulator until you become consistently profitable with our very simple strategy and methodology. It is simple, okay? But it's going to take you a couple weeks to get your arms around it, even though it is simple. Sometimes it's simpler for new people because they don't have to unpack a lot of baggage that they've brought from other things that they've tried to learn that somehow didn't work out, pan out, whatever the issue is. But we walk you through every step of the way. You also get what's called the 24/20 blueprint. That's designed to help you go from 1 to 20 contracts over a period of 24 months. The blueprint is going to start you out in the simulator or the demo account. You want to put together 10 consecutive days in a row in sim before you go live. Okay? This lets you know that you understand the strategy. It lets us know that you understand the strategy. Now, once you go live with one contract, the goal is to increase your account balance by $2,000. So how long will that take? How hard is that? Well, I just walked you through every one of the logic alerts from this week, but if you're trying to increase your account balance by $2,000, Sunday night, the first trade, from the entry to the target, that was $750 per contract traded. The next one was 100 points at $5 a point. It's $500 per contract traded. There's 100 per contract. There's 1,300 per contract. There's another 100, 200. So, is it possible for it to happen over a couple days? It's possible, right? But don't count on that. Just let yourself understand it'll take as long as it takes, because this isn't a get rich quick overnight kind of thing. This is about teaching you valuable life skills, because our goal is to get you to a place where you actually don't even need our alerts anymore. We want you to be able to find these opportunities on the chart the same way we do. Now, we're not teaching you how to trade a specific market like the S&P or the Dow or crude or gold. We trade all of those markets. What we're trying to do is teach you how to trade. Now, some people will say, well, you can't trade the S&P the way you trade pork bellies. Well, our belief is, yeah, you can. Because with auction-style markets, what happens is you've got buyers on the bid, sellers on the ask, price channels back and forth. And so while these different markets may have different personalities, we're not looking to get married or even go on a date. We're just looking for a high probability, low risk trade setup. So the blueprint, once it gives you the green light to go live with real money, your goal is to increase your account balance by $2,000. And again, that takes as long as it takes. When you add the second contract, that's when it gets exciting, because you're adding the second contract with profit you earned in the market. Now, that first contract comes from your savings or wherever you get your money. But beginning with contract number 2, if you stay with the blueprint, when you add number 2, number 3, number 5, number 10, you're always adding the next contract with profit you earned in the market. If you haven't earned profit, if you don't have the profit available in your account to underwrite the next contract, then you don't want to add another contract at that point. You want to book some mentoring sessions and let us go through your trades with you to help you understand why you don't have the profit available to add the next contract. Okay? Now, with one contract, a 2-point move in the S&P, just as an example, is $100. When you add your second contract, by following the rules, You add that second contract, the same 2 points is now $200. When you add your third contract, it's $300. The math's pretty simple. By the time you earn the right to trade 10 contracts, and by earning the right, that means following the blueprint and increasing your trade size, one contract at a time, always using profit you earn in the market. By the time you earn the right to trade 10 contracts, 2 points, that's $1,000. The same 2 points that made you $100, those same 2 points can make you $1,000. Okay? But it's very important that you start in sim, get a real good understanding of the strategy, become proficient at applying it to the chart. Now, you might want to focus on just one market in the beginning, keep things simple, and that's okay. If you like the S&P, you can focus on that. If you like crude or gold, you can focus on those. But once you understand the strategy, then when you get up and get ready to trade each day, you can just scan through the markets and find the market that is currently offering you the opportunity, because it's the same opportunity across all markets, all time frames. Everything we do, everything we teach is fluid across all markets and all time frames. As you can see, as I showed you already, crude, gold, silver in the other direction, gold in the other direction, S&P, Dow, Russell. See, it's the same strategy, same methodology, same indicators, same everything, no matter which market we're trading, and no matter what time frame you choose to use. Maybe you're more comfortable with a 5-minute chart. If that's where you end up, that's okay. But we're going to start you out. We're going to train you on the range chart in the live training room. You get 2 hours of training every day, Monday through Friday, from 9:30 a.m. to 11:30 a.m. Eastern. We take a 30-minute break, we come back, and then we do this afternoon broadcast where we go through all of, Michael recaps the room, and I do a recap of all the Concierge Trade Alerts. So, let's go to the chart. The S&P, we have put in today a new all-time historic high. Bing, right? We've traded through this 100% extension. I used the Fibonacci price extension tool to go from the low to the high to the retracement low. It gave us a number at 34.97. We've actually traded as high as 35.0950. Okay, now let's go to the 30-minute chart where we can put lines in the sand. Okay, last night's alert on the S&P was to be long 34.92. And that's right. $34.92. There we go. $34.92. All right. We're above the highest weekly zone. We're above the BBC. Whenever price is above this green line, we call it the BBC. It just stands for Bull Bear Cross. When price gets above it, we're looking for higher prices. This is where we hit that 100% fib extension yesterday, off the alert at 34.86. And this pullback, even though it was a dramatic pullback, the pullback held. When price pulls back to the BBC, we expect it to hold. It holds more often than it doesn't. When price pulls back to a weekly trading zone, we expect it to hold. It holds more often than it doesn't. So from the pullback, we get another leg and a retracement back to the BBC where it held again. And then it took us right up to the trigger at 34.92. And we had a retracement to the BBC. And then we put in a swing high up to 35.09 and a half. So from 92, that's 9 and 8, that's 17 points at the swing high. Now, I'll be the first to tell you, getting out at the swing high or swing low, well, that's a challenge, okay, because you don't know it's going to be a swing high or swing low until after the fact. But you see how after this bold move up, price started to walk sideways. The step line here crossed blue and climbing. On a long trade, you want price to be on the left side of blue and climbing. So we're just kind of climbing the back of blue and climbing. And then we put in this swing high. We start to walk sideways. The step line crosses over. So what we're looking for is the first, on a long, the first red candle that closes below the step line after it crosses over. So the closing price of this candle was 35.03 and a quarter. So that would have been 11 points. And since the step line hadn't fully crossed over at this point, if you waited for this close, that's 35.0275. So that would be a 10-point move from the entry to the exit signal. Now price got back below the trigger. Remember I said important prices, important areas, almost always tested. And so we do anticipate additional triggers. We triggered again, but the reason I always want you to go and look at your chart before you place a trade is to make sure that the structure of the market lines up with the trade that you're about to execute. Going long here above the BBC with blue and climbing as your support, perfect. But here, price has dropped below the BBC. When we're below the BBC, we anticipate lower prices. And that's what we got. So did it trigger again? Did it give us a move? It did. However, based on the 30-minute chart, that's counter trend. You've also got red and falling overhead. And red and falling will most often provide resistance, just like blue and climbing provides support till it doesn't. Red and falling, think of that as resistance. So price dips back below the trigger, triggers again, but this is not an alert trade that I would take because you're going to go long right into potential resistance. And when we trigger again over here, you've still got that same issue. Okay, you're below the BBC. Now, if this thing consolidates here, it may give us another tradable long trigger at some point. The short side of this was 34.74, which is right here. So when I say you go and put two lines in the sand on your chart, there's the long line, there's the short line. Everything in between is the market just trying to make up its mind what it's going to do. Okay, now there'll be logic alerts that will walk you often from line to line. This is based on sort of a bigger picture look. At 34.92 and above, we only want to think about long trades, and if we get to 34.74, then we're either going to get short at 34.74 or we're only going to be thinking about short trades once we're below 34.74. On the Dow, the alert was to be long 28.605, and that's right here. $28,605. There we go. $28,605. And from 605, we put in a swing high at 28,718. So from 605 up to just call it 705. Okay, that's 100 points. That's what the market made available at $5 per point equals $500 per contract traded. Now, needless to say, when you're starting out, if your goal is just $100 a day, which for the Dow, that's 20 points at $5 a point. This one move here was, it's 5 days worth of work, okay? The short trade on the Dow was 28,395. So we haven't seen that yet, but you would still want to get your line in the sand in case price decides to fail this afternoon. 28,395. Okay, so let's go to the Russell. Okay, the Russell's setting up for a short trade here. Last night's alert, shrink it down. Last night's alert for the Russell Concierge was 1572. And from 1572, we ran up to the zone overhead. Now, on all alerts, on a long alert, the final trade to target is the weekly zone overhead. On a short, it's the weekly zone below. So from 72 to 78, that's a 6-point move. Six points. Now that's just to the zone. If you chose to stay with it, we put in a swing high up at 1584. So that's 12 points. Okay? But let's say you just got out, at the trade to target. 6 points, $50 a point. That's $300 per contract traded. Now, if I drag this across, like that. We get back below the trigger, we trigger again. The challenge being is that right overhead, we've got the BBC. So below the BBC, we're thinking lower prices. Above, we're thinking higher prices. And we've got red and falling. So price actually goes from the trigger right back up to the weekly zone. It runs into the zone and red and falling. Now when price rises to a zone, we expect that to be good resistance. When price rises to red and falling, we expect it to be good resistance. And it was. Okay, both of those things. So we get back below the trigger, but you got that same scenario. But things might be about to change. Okay, if price gets above the BBC, now we're looking for higher prices. And as price gets above the BBC, this red and falling is going to turn into blue and climbing. So we may have another alert on tap here to be long 72. Now because we had that little swing high right there on an alert that we couldn't trade because of where price is in relation to the BBC, you might let it get, above that high. So perhaps your entry becomes 1573. So then the trade is 73 to 78. That's 5 points. But you want to make sure price is back above the BBC before you get long. Now the short side for the Russell was 1558, which we've not seen yet. But in the event we do, there it is. We got our line in the sand. Okay, let's go to the NQ. Now the NQ, kind of a sleeper overnight. The long side for the NQ was 11,996. $11,996, and we put in a swing high at 12.16. So that's 20 points, $20 a point. It's $400 per contract traded. Then we had another trigger. Okay, we're above the BBC. We've got blue and climbing below us. So the swing high here was 12.018. And again, the trigger. John, I see you, and I'm going to open up your mic here in just 1 second. So again, the alert on the NQ was to be long 11996. So from 96 to 16, that's 20 points. And from 96 to 18, yeah, call that 20 points. At $20 a point, that's $400 per contract traded. Now, we still have to do gold, crude, and silver. But we're going to talk to John first, and then Garrett is supposed to join us at quarter after, which it's almost that time. So good, maybe these two will have a chance to talk to each other. Garrett, when you pop in, just send me a message so I know you're here. And John, I'm opening your mic right now. John, welcome to the show.
Hi.
Good to have you with us.
Hi, thanks. Yeah. Look, you know, a few things happened, you know, overnight. The Japanese market tanked, and that caused a bit of a sell-off, but the market came back. But, you know, I mean, listen, we've never seen a market like this, the way some of these stocks are going. Look at Roku this morning. I mean, Roku just took off from the open and is up about $15, but it's actually coming off right now. And there's a couple of other ones. There's NTNX
right there.
Yeah, I mean, you know, we call this
that's a 4
big
hour
rally.
Put on it daily.
We called this in the teens, remember? And it was in the 10, about 110.
Yeah.
We called this a while back, and it really took off. And however, you know, I think what you got to be really careful of. You know, we looked at Stamp the other day. I had Stamp as a sell yesterday, and it came down about $10 or so, probably a bit lower today. STMP.
STMP. Okay. There's Stamp.
Yeah, I mean, it's kind of breaking down exactly the way we thought. And, you know, it's worth putting up Tesla because Tesla is actually starting to break. It made a nominal new high this morning, and it's failing again. And I think that trend line is a very vulnerable kind of a setup here right now. And it's probably going to get broken next week. So I'm kind of after the story I told you yesterday about these.
Now, this is a company, guys, that's never made a dime, correct? They've never been profitable, right?
Well, I think they might have had a couple of cash flow positive quarters or something.
Have they? Okay. All right.
I think so. Yeah.
Fair enough.
They've definitely had a few upside surprises, and you know they're making a lot of cars. I mean,
They're
really
making a lot of cars, yeah.
Yeah. But I mean, it's a miracle story, really. You think of it, it's remarkable, and to get the guy to get to, you know, the fourth richest guy in the world, 100 billion, is really something, you know. But if you remember, when we were looking at, you know, prior to the space launch around 800 was where we said, you know, we thought that the success of the space mission would have a big impact on the stock. It certainly did.
Yeah, it did.
And then we had this, and, you know, we did call that 1400 low. And look at the outcome. It's really phenomenal. But, you know, I think this stock is selling for about 1,200 times earnings. I don't know whether that's a Wall Street record, but it's pretty high.
1,200 times earnings. Wow.
Yeah. So, you know, it really, I mean, look, it always looks fantastic in these bull markets before the
bottom falls out. Yeah.
Yeah. And we're sort of pretty much in that groove right now. Look, I'm not. We just pulled back a little bit on the Nasdaq, but as I said yesterday, you cannot underestimate the capacity of this market to just keep coming back. And when you see these, I mean, another one is NTNX today, which is one of the high flyers.
NTNX. There we go. Wow.
Really nice move there.
What are these guys doing? Any idea?
Some sort of a technology deal, and good base. I mean, actually, look at the base. It's probably going to go.
Yesterday.
I think so. Yeah.
Yeah.
And look at the length of that base. And breaking out above it, it kind of portends probably higher prices. The other one is ULTA. That's an interesting one because it opened about $30 or $40 higher this morning, but it sold off. So this is more realistic of trouble ahead when you see this kind of thing happening.
Yeah, it hit that previous resistance there, and
right.
Boy, well, it looks like almost to the tick, just about.
Yeah. So I mean, and by the way,
this is a beauty supply company, which when you think about it, everybody has to stay indoors, and when you go out, you got to wear a mask. There's not a lot of parties and ballroom galas going on. People aren't going to the hair salon. I don't even know if you can go to the hair salon. But here's a beauty supply company that seems to be doing pretty good.
Yeah, I think they got a lot of online sales for stuff that people, if they can't visit the place.
Sure.
It seemed to me to be, look, it hasn't been a spectacular performer really compared to all these other stocks. So it's sort of acting a bit like the airlines. And speaking of which, if you could put up Boeing doing, we've had a couple of false starts with Boeing, and it just can't get out of its own way. Although, I would have to say if we took out I think it's 180, maybe 180 there. 190 maybe, just above 180. I mean, if we were to break up through that, I think we'd actually still go for a run. And the Dow is sort of the last man standing. It's becoming the strongest index, which is a problem, frankly, at this stage of the game. So I mean, you just don't know what next week holds. Going into the end of the month, morphing into September, whether we're going to have a shakeout, it just could come out of nowhere, or maybe you're going to wake up one morning and the Dow's going to be down 1,000 or something. Either way, the UVs and the SQQs and things are kind of like they're not going down anymore. They're actually rallying a bit, so that's kind of
Here's the UVXY.
Yeah, I mean, it's sort of turning upwards, and I'm not, this kind of little selling that's gone on today probably means it's going to test the lows next week, which would make sense. Maybe it has to go to a new low in September before it reverses, something like that. So, I think that rally we saw a couple of days ago was just maybe a wake-up call to be ready to buy this one of these days. But usually when we see that kind of formation, it means the market's actually going to rally again. And what usually happens over the weekend? We have a Sunday night sort of rally, and we set up for a new week, and we still continue to go higher. And I mean, when you see stocks like Roku going up today, I mean, you almost can't buy them. They move so quick. It's really incredible.
Garrett, you need to unmute your mic on your end so that I can unmute you on this end. I'm glad you guys are going to get a chance to chat for a minute. There you go. Garrett, welcome to the show. Yep.
Thank you.
John's here.
Hi, gentlemen. How are you?
Pretty good. Great to hear you. Great to hear you, Garrett. After it's been a while.
You sound healthy and well, John. You sound.
a lot better, thanks. I got my mojo back a bit, so I'm kind of feeling much
Always
better.
nice to have your mojo.
Yeah.
You bet.
You know, I did warn yesterday, late in the day, that the metals were turning, and they were going to take another shot upwards. You know, we're actually getting a bit of selling here starting to come in, which could actually turn bad. But you know, the fact that we got up this,
gold, I think we'll find support right here. We got a weekly trading zone and the BBC, so a pull back into here should give us an opportunity to trade this thing long, possibly back up to this swing high.
Yeah, no, you have to acknowledge that, because we're going into the end of the month. We haven't broken down. Really the pullback's actually been pretty modest considering the rally. Mm-hmm. And we seem to be, just like the market, it's not quitting its rally attempts. However, with this spike thing that happened yesterday, if we did turn down from here and broke this trend line, it could actually fall apart. It could unravel still. So you have to keep that in mind. I think the next, Monday, Tuesday is probably critical for the gold as to which way it's going to go. If that multi-trillion-dollar deal comes through with the Congress, that could actually be pretty bullish. Could push the gold maybe to new highs. So that's the way it feels to me at the moment.
Dwayne, I got a few charts for you if you want to.
Yeah. Let me send them over to you. Yesterday when I was talking with Dr. Tom, the left seems to have woken up to the fact that their constituents are perhaps a little bit bothered by all this violence, that perhaps it's crossed the line and actually is out of control. So imagine this, Soros or whoever else is funding these rioters, because they are being bussed in. I sent you the charts. There you go. So they're being bussed in. They're being paid. Let's say Joe Biden appears somewhere, comes out of his basement, and says, guys, it's time to stop all of this violence. And so then Soros and company, they send a memo to the people, stop right now, or your funding will be cut off. Bam. The streets go quiet. No more fires, no more shootings. It will give Joe Biden a godlike appearance. He waved his magic wand, and it all stopped. Now,
that's a really good point.
Oh,
and
it's a
Trump
scary point. It's a scary, scary point. Go ahead with your thought.
Trump should advertise that, because that's what if you've read Rules for Radicals, what they do is that whenever you get a good idea or you expose the truth, then they come back and take it and say the same thing. They just say it louder. So if you say that, examples, Hillary Clinton's disgusting with what she's done, she comes back and says, they're deplorables. Well, it's a same synonym, and she comes back and yells it louder. And that's the kind of stuff they do. Trump comes out and says, this news, it's fake news. Now it's, the Republicans are doing fake news. So it's like, could you guys ever create anything on your own, or do you just wait for somebody to say something and then you adopt it and yell it louder? And they can yell it louder because their people own all the news media. So whatever they want to say, they can get out there and say it. And that observation on Joe Biden is classic, because this guy can't, probably find his way from one room to the other. So, if he comes out and says that, and then everything stops, you're right. He looks like the Messiah. Mm-hmm. But the thing that Trump's got to say is, look, this happened. The basic thing that he ought to do, and I've said this for 4 years, so I guess it's not going to happen, is he ought to have a fireside chat, and he ought to start exposing these things. And what he ought to say is, this I said, he says, look at all the rioters out there. I said, think about this, folks. How many conservatives do you think are out there? He said, I'll give you an answer. 0. There aren't any conservatives out there. How many liberals? They're all liberals. Oh, and by the way, they're getting paid by George Soros. Everybody knows that. So, if they, Trump couldn't stop see, I will bet you that's exactly what's going to happen. Trump couldn't stop this, but it wasn't his
Joe
place
Biden,
to stop.
even though I'm not the president yet, now that Trump has shown us that he can't stop this, I'm going to show you how it's done. Let there be peace in the land. And it happens.
Oh, yeah.
How does Trump get out in front of this? How does, I'm just some guy on the internet, with a radio show, and I can say these things, but how does Trump deal with, how does he head this off at the pass? I haven't been able to figure that out.
I think what you got to say, and this is why I said he should be doing some fireside chats, unless this is just a big game on all of us and they're all on the same side, and no matter what, this is just the joke's on us, but if that's not the case, and if Trump is the real deal, I think you've got to say that, look, first of all, where are these riots happening? Are they happening in Republican cities? No, they're not. They're happening in Democrat cities, okay? They're controlled by Democrats. Now, in Democrat cities, one might assume that people who have businesses there are probably more Democrats than Republicans, you would think, and these people have been wiped out. Their businesses were wiped out. Why wouldn't a mayor, any other time in the history of the country, a mayor would have stopped this?
Sure.
But this time,
Instantly.
they didn't. And why is it? Because we're having an election. They didn't stop it. Not only did they not stop it and protect their own Democrat people who have their businesses there and who help probably give money to support these people that are mayors and whatever they are. The other thing that they didn't do is, they didn't support the police. They supported the terrorists in favor of the police. So I said, this is a big setup. This is obviously a setup. And what he ought to say is, what we ought to see next is Joe Biden will come out with his magic wand, wave his wand, and he'll say just that, let there be peace. And all of a sudden it'll stop, because all this is funded by Democrats. And that's the magic ploy. That's what he'll do. That's their whole plan.
That's what this
Trump,
whole thing has been about. It's a sinister plot,
I need to get this to... that's such an important thing. I need to get this to Trump. Let me make a note. I've got. I got to make a call here. That I really think that's important. I have somebody that I think can get to him.
Good.
Yeah, this is really important. Anyway, but on another basis, let me show you a few charts. Okay. And this is the S&P 500 daily from the March low, and you've had this kind of this is your first vector up, and actually the second vector angle is about the same, so it really hasn't vectored over much. These vertical lines, I have long-term work that I do, and when it comes together all in one spot, it's usually extremely good. That happened at the July 19th top in 2007. And then I had it where it covered a little bit of a range of about 1 week, which happened in the first week of October. So both of those were good. This time, I haven't done it for a couple of months, but since it's long term, it won't change. My dates here are August 25th. So we're already in the target zone. This is September 3rd. And then this one over here, the different colored one, the black one, is the first day after Labor Day, because the term summer rally happens because you tend to have a summer rally. So if you are having a summer rally like we are, usually they don't get past Labor Day. I did the monthly breakdown, and actually the 28th today is typically a buy day seasonally, and the sell day on that would be September 5th. So that's why September is the worst September is the worst performing month of the year. My data goes back to 92 years to 1928, and the average September is down 1%. So yeah, it's still the worst performing. I had something that I was looking at from 1980, and September was the worst performing month and down an average of 0.7%. But if you go back to 1928, it's still the worst performing month, and it's down 1%. So anyway, this, for me, I'm looking for a top in here. I'm actually looking early next week, and we'll see. But obviously, this is the line you've got to break right here, and then we'll see what happens. This line here, I wanted to show you this because this is absolutely incredible. This is the most amazing trend line that I think you can draw if you're drawing from the 2009 low. Mm-hmm. I make a challenge to anybody. I say, you draw a better trend line than that, a more impressive trend line, you better send it to me. Here's the move off the low. The market was very oversold, so it jumps up pretty good, comes down. So the first couple of years were above this. Then it breaks it. Once it's broken, it's never surpassed the line for the past 9 years. You've come up to it. Look what happens when you come up to it. Hit it, bang, back down. Come up here, you kiss it here, you kiss it again, you hit it, you start breaking off here. I think that's April. And you're coming across March, April in this time period. May 20th was the high, and then you drop down in August into this 2015 decline rally, and then drop in down to the election here. And here you're pretty far away from the line. But you work all the way up here. You get that big run for over a year when you never had as much as a 3% correction. It takes you right into the January high. Mm-hmm. What do? You hit the line, boom, fall away from it. Then you get kind of an ABC, and this is that September, October top, and it crashes down into the Christmas low. And then again, all the way back up to it in February. And then you drop down here and you think, well, we're never going to see that line again. And we're not there, but this makes it look like we're there, but we're not. But we're remarkably close. So I would think that caution would make sense here. This is the same line as the other one in the QQQs or the NASDAQ. So you can see which one's been the strongest. Here you're just the same right into 2015. You pull down in the election, and then you come up and hit it rather than in January of 2018, you hit it in mid-year 2017. And then you move up above the line, come back down and test it, move back up and double top, come down and test it again, and then go up here into to your September, October time period, and then drop down. Once you get here and drop down, now you can draw another vector because you've broken out of this line. That would go from this high to this high, and that's this line here. I've got this one here, this dotted one from back there, but here you've got your new one, and this is a huge move, and it finally gets it up here and makes this top, and then when this breaks off, then you can draw in the more aggressive line from here. Well, the funny part is, not only are you well above this red line, but here you're well above it. You've got a three-pointed hit here, and this is an extreme line. And then, lo and behold, you get an even more extreme line, also with 3 hits, here, here, and here. And now you've gone in your parabolic vertical and even exceeded this line. So you, from your first line here, this is actually the 4th vector higher. This is 1, this is 2, this is 3, and we're above it now. So, I mean, we are getting to the point now where we're very, very close to being as overbought as we were in 2000. I think the move from the base there was 12 point, 6, 7 times, something like that. And we're pushing 10 times right now. It started at about 1,000. So by the way, this next chart I'll show you that. You started down here at about 1,000, and we're up. We're almost 12 times from this point here. It's almost 12 times. 12.67 is what it was here. You go from here to here, 12.67 times this move. And so, I mean, to me, this parabolic move here, it's a very similar move too. You have this arc here, you come underneath it here at the starting point, here you are underneath it, you come up, there's a few breaks under here, here's a few breaks under here, and this one here, and then you come into that final parabolic move higher. I drew this trend line from obviously the low, which was in 2008, and I took it through the next low, which is pretty normal, I took it and paralleled it off here. We're real close to that line. Is it going to stop there? I don't know, but you know what? These things are so similar now. When you're looking at a 12 times move, and you're in a parabolic, and you're running into some trend lines, I don't know about anybody else, but this starts to get my attention. That's kind of what I'm looking for when I'm looking for things to start to go in the other direction. And the other thing that I think they might do, if Joe Biden parts the sea with saving the world by just coming out of his basement, I can just hear it now.
Wand.
I spent my time in the basement speaking with God, and
there you go.
God has given me this power, and I don't want to blow it because I've got so many plans for the country, but the first thing I'd like to do is stop the violence. I can just see it now. I got to get that word out. I'm going to go. I have a very good friend, and one of her best friends was Trump's secretary for a long time. I don't think she's the secretary now, but I would imagine
that's pretty close to the top.
Yeah, I would imagine that she can get there. And my friend was down at Mar-a-Lago quite a few times and had met people. So I want to pass that along. That's a brilliant observation. That's wherever that came from, in my view, that's an outstanding observation. And I think they're pulling out all the stops. And the thing, Trump is missing an opportunity because he's saying, look, this violence, it's all Democrats, 100%. It's paid for, it's done. They're talking against law and order, this whole thing. And I think you just exposed the plan with that. I really think that, because otherwise Joe Biden, to anybody who pays attention, was one of the most underwhelming vice presidents of all time, for good reason. He spent his time figuring out how to make money for himself and the president, I guess. But
and for his family.
Yeah. His son, who is supposedly not the sharpest tool in the shed, but the guy who, people aren't talking about what Biden did, and I can't remember if it was 2013, but it's very easy to find. He got his brother, after they went in and blew up Iraq, because that's what the globalists like to do, after they took, one of the most historic nations on the planet, going back to the days of the Tigris Euphrates and the birth of civilization. They blew away all that. But then they had to rebuild it, of course. So, and that's where they make the money, spend the taxpayers' money to have the war, blow up a bunch of stuff, and then create a business opportunity for the other guys to go in and rebuild it, which is exactly what they did. And Biden's brother got something like a $5 billion contract. Now, what's interesting is, he must have been a great contractor that bid for that and fair and square won the bid.
Yeah, he had no experience in the industry.
he probably can't even spell contractor. He was not a contractor. So anyway, we're getting taken, and it's hopefully.
Wayne in the audience pointed out something that we should all be questioning, and that's this whole thing that supposedly began with George Floyd. Why were his autopsy results held back for so long?
I don't think he's dead, but
Well,
I think he's living on the. I think he's down on the Riviera with a white guy who was kneeling on his neck. They worked. Didn't they work together in a nightclub or something?
Yeah, they did. But I mean, the autopsy shows that with the amount of fentanyl and other drugs that he had in his system at the time, that reason in the car before anybody put their knee on his neck, he was saying, "I can't breathe." And the coroner's report, from the autopsy, explains exactly why he couldn't breathe. I mean, it goes into great detail. And so, now certainly, this police officer putting his knee on his neck didn't help matters any, okay? But he was already in the process of dying. He was already in the process of suffocating to death before the tragedy happened of the officer putting his knee on his neck. Okay, it's a tragedy. A life was lost. It's a horrible thing. Nothing good comes out of that. But why was this information, why was it suppressed?
Well, there's so much stuff that's suppressed. This is all, I believe, a pretty well planned act. I mean, and again, people dying is of no concern to them for two reasons. Number one, it's in their view, it's collateral damage. The whole thing is about them achieving their goals. Whether we die in the process or lose our businesses, it's basically immaterial. Henry Kissinger refers to us, the people, as useless eaters. So take it from there. There's little to no respect for we the people by any means. Number one. Number two, if and when they get in power, if Biden happens to be successful, number one goal, and the elite have their goals listed on the Georgia Guidestones and other places. Number one is to reduce the population by a dramatic amount, like 90%. So again, we're Black Lives Matter. They're out pushing this. To them, no lives matter. And they prove it by allowing what has happened. But anyway, I'm going to make a quick call on that. Maybe we can do something helpful here. But anyway,
that was an original thought, but I'm sure many other people have thought it as well, because I mean, to me it seems so obvious. But
yeah, I mean, no, I think it's brilliant, and in fact, I think it's probably so brilliant that that's what we're going to see. I think that's the game plan. I think that's smart. So much so that I'm gonna see what I can do to blow the lid on that. But nice to visit with you guys.
Yeah, good.
I got my daughter back off to it's been hard to get with you, Dwayne, because my daughter's been when they closed down San Diego State in March, she came back home, and so it's been nice to have her around. And then she just left back last week. Every year she's lived in a different place. They were in the dorms the first year, an apartment the next year, lived in her sorority last year, and this year, they're down on the beach. So she got back, and then my wife went down. She's been down to help her out, so they're still down there. So anyway, so I've been. It's been a busy couple of weeks for me, but anyway, it's going to clear up. So we'll get back together and chat. But thank you for having me on, John. Nice to hear you sounding healthy and well again.
Thank you. Actually, Garrett, that's an awesome chart. That one that's up there right now. That's really something.
Oh, this NASDAQ one?
Yeah, it's an amazing chart. Jesus Christ.
Yeah, thank you. It's just I'm kind of visual, and it was just funny. And sometimes I look at these charts and I think, boy, that trend line looks like it might go there. And every once in a while, they do, So it's kind of cool. But this one, I just was playing with those numbers. And, when you look at this chart, you think, oh, this is way more overbought than 2000. But if you could go back in time and expand that 2000 chart, the reality is, it was the number one in history. So you got to, and typically that's a typically that's a third wave, and this is a fifth wave. So you shouldn't have, the fifth wave shouldn't be as strong is the third wave, unless it's a parabolic.
Well,
so,
I've got a different count on it. I actually think it's a third wave. We had I agree with you about the third wave going into 2000, sort of a 3-4, but this could be a new third wave.
Yeah. Oh, no question about it. I mean, frankly, it looks like it. In other words, if you start from 2002, you've got a 1-2. And we're in the third wave right now.
Right. And I think, we've talked about getting another hit in 2022 or 3 or 4, contingent with and then look at the interesting thing, look at the last huge market rally before the gold bottomed, and the gold became the next candidate for a rally, right? So we're sort of doing the same thing. And look at the depth of the shakeout from the 2000 to make the three, the correction. I think we're going to get a shorter version of that, that'll take a year or two to play out. Kind of, like a little bit like the 09, 709, something like that. So potentially 2022, 23, 24, or even earlier, even like next quarter, who knows? But there could be a pretty deep shakeout of this.
It's interesting, arguably if they do the multi-trillion-dollar deal, of course it's ridiculous because, you're at some point, you're not going to be able to, you can't keep doing that, but, and theoretically that should run the gold up quite a bit. But what's very interesting is that gold and the stock market have been moving hand in hand. And
that's really bullish when that happens, because the reason why that's happening is because they're both responding to the stimulus, and it actually tells you the Fed is, whether it's the plunge protection team or Mnuchin and company, whatever they're doing, whether they're pumping in trillions, whatever they're doing, it's anytime you see the gold and the market going up together, it's a go with situation. You just have to do it because look at the results so far. But there is a risk. Why I mentioned this gold a little while ago, just starting to come off a bit now. There is a risk of this thing unraveling still from here.
And I think that can happen. This is what happened in the late 70s. You had gold and the market essentially going together due to inflation, and this time you've created. It's hard to have inflation if you don't have a driver, and the reason I bring that up is that we've had such a hard hit this time to a large percentage of our people. And even before that, you had half the people paying for the other half. So it's going to be very hard to drive an inflation. It's going to be hard to be a driven inflation as it was in the 70s. Because in the 70s, you were starting to build up debt and so forth. And you were coming out of that debt correction in 74. And you came on with the inflation. But it was easy to push because people would... there was a push to get out of dollars. People didn't know what do you do with inflation? We've never really had runaway inflation before. And then they figured out, you just get out of dollars. You buy real estate, you buy gold, you do something. So, and they had, they weren't so burdened by debt, and they didn't have to pay for the other half of society. Most of the people were working, and I don't know what the ratio was then, but it sure wasn't 1-to-1. And they, in other words, they had the ability to push. I'm not convinced that we have the ability to push this time. The verbal ability will be there, but I don't know if the fundamental ability will be there. And this is the time in the cycle. That was the time in the cycle you should have had a runaway inflation. This is the time that if you're going to get a runaway anything, it ought to be runaway deflation. And the only thing that government doesn't like deflation because it tends to expose them. So anyway, it'll be fun to see. Well, listen, I appreciate spending time with you guys as always.
Thanks,
and
always a pleasure.
If I don't, and I'll chat with you here.
Call me over the weekend if you want to.
Yeah, exactly. You guys have a great weekend.
You too.
Likewise. Thanks very much, Gary. Excellent presentation. Well done.
All right, John.
So,
what else you want to take a look at?
Well, we've been a kind of a fan of INO, and I did tell a few people yesterday. I thought it was going to reverse today, INO, and it actually is. It's had a pretty strong pullback, along with the rest of the vaccine stocks, but that may be over now. You could certainly see this thing suddenly pop up. It needs news. If it comes out with some good news, this thing could really move back up pretty smartly.
So what's the word on this new test? It's like $5 or something.
That's the Abbott Laboratories. If you can put up Abbott ABT.
That seems like
that's what happened yesterday. See that? And that had a fallout effect on two stocks. One of them was QDEL.
Abbott test.
Yeah, it's a 15-minute test. $5 15-minute test.
Easy to use. How could something so simple be right under everybody's nose? Test delivers results in just 15 minutes with no instrumentation. Abbott to offer a no-charge complimentary phone app which allows people to display their Binax Now test results when asked by organizations where people gather, such as workplaces and schools. What do you think? Is this the real deal?
It looks like a contender, that's for sure. There's another competitor over in Israel that they say takes like 5 seconds or something to give you a result. So it's the innovation is certainly happening at warp speed for these things. If you just take a look at QDEL. Yeah, because the problem when somebody comes out with a better mousetrap, look what happened to that. That's had some kind of a test. And then there's another one, I think it's DGX.
Tell me again.
Yeah, I think it's DGX.
DGX.
Yeah, Quest Diagnostics, that's the one. Same sort of thing. And then there's SRNE, which has a saliva test. And that ran up to 20 last month. And it just got taken apart.
Yeah, we used to look at this one a while back, I remember.
Right. It was a good ride. It was a good run up while it lasted. But again, it's interesting that this is kind of like, it looks a little bit like Innovia, and potentially these kind of things could have another run up here in the next month. INO is waiting for a peer review in one of the major medical magazines.
Mm-hmm.
If that speaks glowingly of their vaccine, that could really put them in the front row. So, that would be a big deal. There's another interesting story out here called Geron. We looked at this before, GERN. It's pushing higher. It's struggling a little bit, but it's an interesting story because they apparently have a cure for cancer of some sort,
mm-hmm.
and it's going to potentially disrupt several $1 billion products of the big boys. Johnson & Johnson tried to buy them for $6 about a year ago. The deal fell apart, but it's starting to get a lot of buzz, and it's been upgraded recently. Three or four brokers have come out with a $3 or $4 price target, and I think one of them came up with a $7 target a couple of days ago. So it's got a fantastic base on it, and it could really, really.
Yeah, it's quite a base. It never recovered from this lower here.
Yeah, but I think it's getting ready to go, and definitely north of $2. I think it's going to start attracting
260.
more buying power.
I mean, this could be.
Yeah. Now there's a little bit of a twist to this one, and it's very intriguing. First of all, I think I mentioned I wrote this piece in January 2000, and there were 10 sort of high-flying contenders, of which Jaron was one, and it was at $8 at the time, and we recommended it, and it went to 135. And I basically was making the case, at the time Merck Pharmaceuticals was the biggest pharma company in the world, and I said if I was the chairman of Merck, I'd be putting a 10% bet on these 10 contenders, biotech development companies, of which Jaron was one. And actually it worked out pretty well because every one of these stocks went up. So the theory, the idea that I was proposing actually turned out brilliantly, if you don't mind my saying. Because the upside on these things was pretty wild in 2000, probably very similar to the way a lot of these stocks are flying today. So, but they all, in the same way as the .com was 20 years ahead of its time, this could be the real deal. And apparently a bunch of scientists from Johnson & Johnson have gone over to this company. I think some have left Sanofi or one of these pharmaceuticals in Europe. So people are recognizing what they may have. I think there've been some puts going on. There's some people short this stock, and they're trying to hold it down. But the clincher is really quite remarkable. There's Scott Gottlieb was an FDA commissioner before this new guy, Hahn, and he's gone on CNBC a lot. He's a good commentator. He's a pretty solid guy. He before he was the FDA commissioner, he was an advisor to a fund called New Enterprise Associates, which and he has, now that he's left the FDA, apparently he's back in that role, although he's kind of quiet. I wouldn't say he's sort of shouting it from the rooftops, but if you investigate, you'll find there's some sort of a filing where NEA, New Enterprise Associates, bought about 20 million shares of Geron. So considering that the former FDA commissioner is either remotely part of it or at arm's length or however he's connected, it's certainly an unusual situation and maybe unprecedented. And also, for such a large shareholding, also the it's like a 15% position, something like that. It's a pretty big position. So the other thing is that, remember Tilray, which started out pre-market at about 15, went public at about 20, and went all the, and as we were watching it going up, if you remember, we kept on upgrading the price almost every day. TLRY, sorry. There we go. You'll see, see how it went public here at the beginning, and I think it was by the time it got to about 60, or maybe that gap. See that gap there, Dwayne? I think that was where the news came out that Peter Thiel was involved, right? Mm-hmm. So as soon as, it's the founder of PayPal and everything. So as soon as that kind of news got out, the thing went berserk, and we went all the way up to 300. And remember, we went short at 280, and it went all the way back to $1 or $2 in the crash. So, but the point I'm making is, when people start figuring out that there's such a high-profile guy involved in, behind the scenes of this Geron, it could have a very dramatic impact on the stock. I think, look, this is no easy trading stock. It's very volatile, and there's no guarantees it's going to go up today or even next week or month. But I think the story is solid, and I think that it's at some point it's gonna go.
Interesting. Okay. Anything else?
So no, listen, thanks very much for the invite. It was great to have Garrett on.
Yeah, nice.
And we have a good weekend, and we'll catch you on Monday.
All right, John. You have a great weekend
Thanks.
as well.
All the best. Bye-bye.
Talk to you Monday. Okay. All righty. We've covered the S&P, which gave us a 17-point move off of the Concierge Alert at 39.42. But then we got below the trigger, and market structure changed. See here, we're above the BBC. We've got blue and climbing. Here, we're below the BBC. We've got red and falling. Here, if we consolidate sideways a little bit more, then we're already starting to get a little bit of blue and flat, and so we get back above the BBC. Then from this swing highs at 34.96.75, this swing highs at 99, so potential for a 2-point move there. And if we're going to go back to test the high, then window of opportunity up here once we get above that swing high and before we get to. So that's roughly 35.02 to 35.06, potential 4-point move right there. Okay, just based on market structure. So that's the S&P. Dow gave up 100 points at $5 a point. Russell gave us 6 points to the target, but then it continued moving higher. And the NQ was, I want to call it an underperformer because, I mean, this move from 96 to 16, that's 20 points, $20 a point. It's $400 per contract traded on both of those. And we've got a double top there. The swing high here was 16.75, and here it was 18.25. We're below the BBC. We came right back down to the weekly zone. Look at how many times we've come back down to the zone. Here, and here, and here, and here. We bounced. We got red and falling overhead. So a potential short here would be back down to the zone. That's the highest weekly zone on the NQ. 11,931/11,932. Now the ones we haven't looked at yet, crude. Crude let me pull my concierge screen back up. There we go. Crude long above or at or above 43.25. That was the alert. 43.25, and we put in a swing high at 42. So 25 to 35, that's $100. So it was like $150 per contract move, only one trigger. The short side was 42.75, and the swing low was 42.69. So that's like a $60 per contract move. So not excited about that one, to say the least. And then gold. Last night's alert from gold was to be long, 1959, which is right here. Okay. Now, important prices, important areas. Almost always tested. So our initial move up took us to the weekly trading zone overhead, except that's a this week zone, 65, 66. So from 59 to 65, that's a $600 per contract move. And then we dipped back below the trigger, did it again, dipped back below the trigger, and did it again. So we had a leg and a retracement, a leg and a retracement, and then another leg, and the swing high took us up to 1983. So that's $2,400 per contract traded. 59, 83, 69, 79. Yep. $100 per $1 of movement, $24 of movement. 59, 69, 79. Yeah, that's right. That's the story. Now the short side of gold, not that I anticipate it coming into play today, down here at 1931. And then, last but not least, silver. Last night's alert for silver. Consider being long 27.39. Alright, from 27.39, the zone overhead, or the trade to target, was 27.58/59. So from uh, 27.39 basically it's a 20-cent move. 2 pennies is $100. So $1,000 per contract move right there from the entry to the target. Remember, on every alert, now with logic you'll have multiple targets many times, but the final trade to target on a long is always the weekly trading zone overhead, just like you see here. On a short, it's the weekly trading zone below. Now this continued on through the weekly trading zone. This did not give a great exit signal. The exit signal was here actually below the zone, so you would have been better served to just take profit at the trade to target, the weekly trading zone. A $1 move in gold pays $100 if you're trading futures. A $1 move in silver pays $5,000. And I have an example of that right here. Let me show you. Investing.com, that's where I go to get my economic reports. Silver futures. Long one contract. If you could buy one silver contract at $1 and you sold it at $2, that's a $1 move in the price of silver. It's actually 1,000 ticks, or 1 point. 1 point is 1,000 ticks. $5,000 per contract traded. $1 move in silver. That's something to keep you awake at night, just thinking about the possibilities of that. Right? Okay. So, to wrap things up as we head into our good word for the day, just a quick recap. this week, Logic 247. Last week there was 100 alerts based on the opportunity that the market presented. Half as many this week, 51 total, as of noon today. Still waiting on results for 5, 3 never triggered, 43 actionable, 3 were stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, which is what I teach you. That's 7% of actionable alerts stopped out. Now that's less than normal. The average is 20% over the last 108 weeks. But last week we had 22%. The week before that we had 12%. And we may have some more results come in. We could even have another alert this afternoon. It just depends upon whether or not the market offers opportunity, because with Logic 247, that's what it's based on. There's an alert issued whenever opportunity presents itself. And this is how it looks. Okay? When your phone, your tablet, your PC, your Mac, when it makes the telegram sound, dee-dee-dee. That doesn't mean you immediately rush to put on a trade. It means you go to your charting platform and you look at the chart. You study the market structure. Because remember, the idea here is not just to give you these alerts that you can trade, but to also, at the same time as we're giving you the alerts, we're teaching you how to find them yourself. Wouldn't that be a wonderful thing to no longer be dependent upon someone else to give you alerts or signals or anything else? Just you, your indicators, the chart, price action, and then you're able to do this on your own without help from anyone else. That's the goal. We don't want you to be dependent on us forever. We want to teach you how to be self-sufficient. We want to teach you how to be independent. Now, this is based on one contract, $500, $750, $100. Remember, in the beginning, when you start out, you're going to be in the simulator. You're going to put together 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less before you go live. Once you do that, now you've proven to yourself that you understand the strategy. That's when you go live. You go live with one contract. The goal is then to increase your account balance by $2,000. Once you accomplish that, the blueprint gives you the green light to add a second contract, which you're adding with profit you earned in the market. That's the real game changer. You're adding that next contract with profit you earned in the market. When the blueprint says add number 3, number 4, number 5, number 10, you're always adding with profit you earned in the market. That's the opposite of blowing up an account. Now, I'm not going to say you can't blow up an account with us, because if you don't follow the blueprint, if you don't follow the rules, then you can. It is possible, okay? But if you stick with the rules, if you trade by the blueprint, if when you find that you hit a rough patch, you have 2 days back to back once you go live where you don't reach your goal, you come out of the live account back into the simulator, book a mentoring session. Myself, Michael, both of us, we get together with you, we walk through the trades that you took, we help you understand why you did not have funds available to add the next account. Okay? Maybe it was market conditions, could be something about the strategy that maybe you overlooked or didn't quite understand. Whatever it is, we want to troubleshoot it, get you back on track, trade in sim a couple days, get your confidence back, and then you pick up where you left off. Okay? Going from the simulator to the live, back to the simulator, that's not a walk of shame. That's a smart business decision. That's you protecting your business. The goal is to build a profitable trading business. So you take whatever steps are necessary to do that. And if it requires going from sim to live, back to sim, back to live, back to sim, back to live, back to sim, whatever it takes. If you're committed to that, and there's a high probability that you too can become a consistently profitable trader. But never forget, trading is risky. You can lose all of your money and then some. Always check with a licensed investment professional before making any investment decision. Always trade with a hard stop. Never trade above your weight class. In other words, you got to earn the right to go live, then you got to earn the right to trade 2 contracts, because you're going to go live with one. You earn the right to trade 3. It's a process, okay? If it takes you a year to get up to 10 contracts, well, 2 points a day, that's $100 in the S&P. But with 10 contracts, it's $1,000. If it takes you a year to get there, wow. How many college graduates after 4 or 8 years of college wish they had a job that paid them that kind of money? But there's no guarantees in trading. Okay? It's between you and the market. But I promise you, if you don't have a teacher, if you don't have someone to show you the way, I'm not going to say you can't teach yourself, but I promise you it's going to take some time and probably a lot of treasure. You're going to have to make a lot of mistakes that you don't have to make, because we already made them. We've already done every fool-headed, stupid thing a person can possibly do. And we've created this blueprint to show you where the pit holes, the pitfalls are, to try and help you avoid them. Okay? So, if you're tired of gimmicks, if you're tired of parlor tricks, if you're tired of magic, we don't have any magic. This is what we do have. Emini Futures Trading.com. Everything a trader needs. 2 hours of live training every morning, 2-hour afternoon broadcast, one-on-one unlimited mentoring when you need it, proprietary methodology, proprietary indicators, round-the-clock alerts, 24/7 client service. I can't think of anything else a trader would need. If I could think of something else, we would add it. But I think this covers it. You can become a CFRN passport holder today. You can be trading with us live Sunday night. Well, the markets are live, but you'll be in sim. Sunday night, 6 p.m. Eastern. You can be in the simulator, taking off trades as the alerts come through, asking questions in the discussion group. The first thing you need to do once you become a passport holder is get Telegram installed so that we can communicate, so that you have access to all the resources, so that you can participate in the group discussion, that you can ask questions around the clock. And remember, we're not teaching you to trade all these different markets. What we're teaching you is simply how to trade. If you choose to trade just the S&P, you can, or the Dow, or the Russell, or the NQ, or crude, or gold, or euro, or beans. Or, once you understand how to trade, once you see that the setup that we rely on is fluid across all markets and all time frames, then your day is simply scanning the markets to see where opportunity exists and then trading it. You can sit and watch the S&P until opportunity shows up. You can sit and watch gold until opportunity shows up. Or you can scan through the markets and see where opportunity is already presenting itself, and you can trade that. It's your trading business. We'll do everything in our power to help you. All you have to do is ask. If you fancy yourself as a 5-minute trader or 30-minute, hourly, daily, you like the tick chart, the range chart, we're going to teach you on the range chart. Once you understand the strategy, you're free to trade any time frame you want, day or night. Globex markets open Sunday night at 6 p.m. Eastern, and they remain open until 5 p.m. Friday afternoon. There is an hour break each day from 5 p.m. to 6 p.m. Eastern. They got to sweep the floor, empty the ashtrays, that kind of stuff. But around the clock, think about it. People are always going, well, I don't know if this is going to fit with my schedule. Well, there's 23 trading hours in a session. So hopefully, you see, let's say you work an 8-hour day. There's 23 trading hours in a session. Now, if you have to sit and wait for one particular market to make its move, to give you that high probability, low risk trade setup, there'll be some days that you're able to find an opportunity, some days you may not. But that's okay, there's nothing wrong with that. But think of the power of being able to sit down and looking at the S&P, the Dow, the Russell, the NQ, just sort of clicking through the charts until you spot it. Oh, Crude is offering an opportunity right now, or silver, or copper, or the British pound, or the euro. So you're not forced to trade certain hours. You're not forced to trade a specific market, because now you know how to trade. So wherever opportunity exists, you can go trade there. Everything you need, all under one roof. Okay? The Logic 247, the Concierge Trade Alerts, the weekly trading zones, everything you see on this page, it's all yours. And to get started, all you got to do is go here, Emini Futures Trading.com. And you'll be in the channel with us Sunday night, 6 p.m. Eastern. Okay, good word for the day. Negotiating. How well do you negotiate? Ecclesiastes 3:1 says, to everything there is a season, a time for every purpose under heaven. So, do you negotiate well? In order to negotiate well, it helps to understand what's happening on both sides of the table. People seldom buy a product for the reason that you want to sell it. If you show more interest in making a profit than meeting their need, you'll fail. So, here's a few things to keep in mind when you are negotiating with someone. And always ask yourself that question when you look at any kind of trading methodology or strategy. What are the promises being made? What is their goal? Are they more interested in your money than you are? Is there actual help here? Or is somebody just trying to move product? That's a question that you have to ask yourself, and only you can answer. The first thing you want to keep in mind when negotiating with someone is the right attitude. Nobody likes being taken for granted, coerced, or pressured. We don't have a sales force. We don't have a phone room. We don't have anybody to call you up and grind you with offer after offer after offer. We just don't do business that way. Perhaps that's a young man's game. I just don't want to insult your intelligence. Number two, the cost involved for others. There's a world of difference between negotiating with someone who has so much money that whatever the cost, they can afford it, and someone who is sacrificing because they really need your product. If you want a long-term customer rather than a short-term sale, practice the golden rule, Matthew 7:12. Whatever you want others to do for you, do for them. Number three, proper timing. Solomon tells us there's a time to gain and a time to lose in Ecclesiastes 3:6. Whether you're asking for a raise or trying to sell a product to a customer, timing is important. Putting on and taking off trades, timing is incredibly important. If the market's not moving, or if it's just consolidating sideways, that's not the right time. When the market hands you an opportunity, that's the proper time. When someone is hungry, lonely, angry, tired, stressed, or in a crisis, you risk losing out. Whereas if you would just wait for the right time, this is with trading. You never want to trade when you're too hungry, too angry, too lonely, or too tired. You should halt all trading activities until you fix whatever's not in order. If you wait for the right time. Some would say you can't time the market. Well, I don't know. Our results say that maybe you can. What do you think? Does God really care about all this stuff? Any of it? Yes. Proverbs 16:11 says, "The Lord watches to see if we are fair or if we cheat others." He's watching. We answer to a higher authority. We're very much aware of that. That's why we're always truthful with you. You may not always like what we say, but we're going to always tell you the truth. We're transparent in everything that we do. Good days, bad days, ugly days. Trades that seem to knock it out of the park and trades that get stopped out. It's just another trade. But it's part of the truth about trading. Being stopped out is as much a part of trading as breathing is a part of life. The Lord watches to see if we are fair or if we cheat others. Proverbs 16:11. So while we apply that principle to our business, we should apply it in every aspect of our life. Whatever business you're in, whatever your life looks like. It's so important. You've got to put good seed in the ground. If you put good seed in good ground, you shall reap a bountiful harvest. As a follower of Christ, you want both sides to walk away feeling they were treated fairly. That's a good deal. And that's our good word for the day. Hope you have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.